Hey everyone, welcome to the KE Report, another daily editorial. Chatting with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. This editorial, we're going to focus more big picture, what's happening in the precious metals and also copper market, as we have gold now holding above $3,000 an ounce after that breakout. Silver is over $34 an ounce, and copper is very kind of silently above 520 a pound. Look, we're seeing a lot of positive moves in these precious metals, even in copper. And I think a lot of it, again, just deals with what's going on geopolitics. The U.S. pretty much is trying to pick a trade war with everybody right now, with no real clarity on when this will end. And I think it's still fairly early on in this trade war, which clearly benefits precious metals and even copper. That's a bit of a nuance there. But Dave, let's take a step back and look at this gold chart because quite frankly, gold has gone parabolic. We all look about a year ago, March 1st, when gold started breaking out above 2000 and just kept running higher. But I went back to October of 2023. Since that time, we have had four red candles on the monthly chart. So four down months, a couple of those months were pretty much neutral, less than 1% down in a total of 18 months. That means 14 out of 18 months so far, gold has moved up. This is a parabolic move. Who knows where the top is? Dave, what do you take away from this gold market where, quite frankly, we haven't seen this type of a move in years, if not decades?
Yeah, in my weekly column, my weekly Kitco column last week, I warned that, hey, everything's going right for the gold price here. We got all these strong winds, gold's back. You got geopolitical concerns, you got tariffs, you got the Fed basically predicting stagflation, all this. And gold futures now, they've recently become extremely long-term overbought on the monthly. And like you said, they're approaching this parabolic curve, and the monthly relative strength index, the RSI, is at 82. And I remember in the COVID pop when gold finally broached 2000, that, everybody was waiting for 2000 to be breached for over a decade, right? I mean, the 2011 move, it was a given that gold was going to go to 2000. Well, it stopped 75 short of it. And then, of course, we had the 50% correction, and then gold finally got above 2000, and then when it did, the relative strength index on the monthly was at 85, and that proved to be not only a top, but it was a 4-year top, and it consolidated below $2,000, $2,100 for 4 years. Gold has these reactions, once it gets to these round numbers. When it got to 1,000, it did the same thing. It had this really strong volatile reaction, and right when it hit 1,000, it was right before the great financial crisis of 2008, right? So gold got really volatile, and it even got down below 700 before it finally breached 1,000, and then it took off, and it went to that 1925 level in 2011. But now, breaking out of a very bullish 13-year cup and handle pattern. So the logarithmic target of that breakout is 4,000. We reached the initial target was 3,000, and we're there, and now we're consolidating right around 3,000. But, like I said, and like you said, it's getting really long in the tooth here. So, as an investor in this sector, you look at it and you kind of say, okay, I kind of like to have it consolidating for a while, because if the gold price continues to run here during this move, and say it ends the quarter next Monday at 32 or 3,300, that would be a blow off move. And then we'd have to settle in for a long term consolidation. So I don't see that happening, but I don't see a catalyst for that. But, anything could happen, geopolitically by the time quarter and the month ends next Monday. And that we could have a black swan event that could pop the gold price up there to around, the Fibonacci target, which is around 33, 35. So that's a very real possibility. And basically, what you've had in the gold prices, you've had these really bullish consolidations, these symmetrical triangle patterns, right? The first symmetrical triangle was the Trump consolidation, right? The gold price ran up really fast to 2,800. Trump was expected to win the election, and it was sell the news. So it was a $250 consolidation inside of a 3-month symmetrical triangle. That broke out, and then the measured target of that symmetrical triangle breakout was 3050. It hit 3050 here recently. But before it did, we had another consolidation of $125 before it hit that target. And now we've moved above 3,000, and now it's consolidating in a tighter range of $50 between 3050 and 3,000. Now in another a shorter consolidation triangle, it looks like it's happening right now, and going into the PCE index, the US inflation PCE index announcement on Friday. That could be the catalyst for either a move down, a breakdown in that symmetrical triangle, and finally get this intermediate healthy consolidation of recent outsized gains, or a blow off, basically a move out of the consolidation higher and a blow off to that 32, 3,300 level. And basically, like I said, part of me hopes that doesn't happen, because I'd like to see a consolidation here for a while before the gold price continues to move higher again.
So, Dave, as much as we can look at this economic data that's coming out, quite frankly, I feel like all eyes are on the turn of the month when tariffs should be getting put in, or might get put in, might get pushed back. I've titled that as kind of the new Fed meeting here, where everyone sits around and waits to see what Trump is going to do. To me, that's a bigger driver behind the gold price, behind a lot of markets right now. But just to take your comments on RSI into context, look, the RSI, Relative Strength Index, that is, yes, at levels that we haven't seen since 2020 and 2008, also 2006. The MACD, we haven't seen the MACD this strong ever. I'm looking at a 25-year chart. We're also seeing that the stocks outperform and money trickle into the juniors. It's not every junior going higher, but a lot of juniors are doing better. Understanding this relationship where, look, this is the definition of a bull market. Charts are saying it's overbought, but charts can stay overbought for a while in a bull market. Some stocks are just starting to join into this party, while a lot have been partying for a year now. What do you do with your portfolio? I understand being a little nervous, but also being a little excited.
Yeah, it's interesting because, we've been waiting. What I've talked about this ad nauseum, and now it's finally happening. We've been waiting for the shine to come off of AI and Bitcoin, right? Because that's what everybody was focused on, and understandably so. They were making gobs of money in AI and Bitcoin because they just kept going higher. Even though the gold price kept going higher as well, the miners were not, because they're higher risk and their costs were going higher, and inflation was going up along with their costs. But now the gold price is rising faster than inflation. And now we've got, it looks like a double top in Bitcoin at 108. And the action over the past several months in relation to the gold price, it's clearly that gold is the go-to safe haven asset and not Bitcoin. It's just a speculative asset. And also you've got AI. If you take a look at the MAGS ETF, the MAGS ETF, which is basically the Magnificent Seven stocks, that's corrected over 20% now. So basically, you've got the AI and crypto that was leading the market higher and taking the speculative money out of the gold sector. They're leading the stock market lower now. Sure, we've got a corrective bounce happening here in the stock market. We've got the S&P back testing its 200-day moving average, and the Nasdaq has not got there yet. But clearly, you look at consumer confidence today. People haven't been this pessimistic in 12 years. You look at CAPE ratios. You look at Buffett index. All these things showing that, hey, the stock market is in a correction now, and it looks like it's finally going to correct for a while here. And we're seeing that sector rotation that we were waiting for of ETFs. Gold ETFs are rising now. The inflows are rising while, people are looking around saying, hey, what's going up while everything else is going down? Hey, look at the gold complex. We haven't looked at that in a long time. And look, these miners are making gobs of money. And so, we're starting to see that rotation now. So we're seeing we're seeing the miners outperforming the gold price, and we're seeing the juniors outperforming the miners, the quality juniors, that is. So a lot of these juniors, that I own and that I cover in my newsletter, they're breaking out of these big consolidation, these high consolidation bases, and the optionality stocks that I own are breaking out of bottoming consolidation bases. So everything's going right here for the gold stocks and the gold price, while basically you're seeing a mean reversion in the stock market to the downside and a mean reversion to the upside in the gold stocks in relation to gold and the stock market.
Dave, to that point, what we're also seeing is a move away from the US. You have European markets at all-time highs. We were talking years ago about how the gold price in foreign currencies was at all-time highs, but US investors were distracted because it just seemed like money was pouring into US equities. That seems to have turned this year, especially as European equities, even Chinese markets have done a lot better. It seems like this is more of just a move away from the US. Now, again, this is also geopolitically focused, but we also have to consider just how well the US markets did. They just consumed all sorts of capital over the last more than a decade. Maybe that is shifting. That's only time. Time will only tell on that one. But one other sector, one other metal that's doing well is copper. I mentioned it on the onset. Copper over 520 right now. Seems like the copper stocks, they're lagging this move in copper. But one thing we have seen historically is commodities do really well right before a recession hits. I don't know why that happens, but that does happen. What are you taking away from this copper move, even tying it into that potential recession trigger that we've seen in the past?
Yeah, copper, it's quietly made an all-time high here. Nobody's really talking about it. And, it basically, with Trump last month, he ordered the Commerce Department to investigate the nation's imports of copper. That's as a precursor to imposing duties. So since then, the copper prices have spiked, and traders have basically rushed to send the metal over here ahead of any tariff. So I think that's a tariff-related move. And like you said, I mean, if the US is going into a stagflationary recession, and the Federal Reserve basically came out and told us they're predicting stagflation. And, if that's the case, then I would imagine the copper price is probably going to get hit a little bit because, during recession, copper is a metal that will get hit.
So you're not moving into any more copper stocks then, or are you even looking more favorably at any copper stocks?
Because if you take a look at US copper projects, they're very attractive right now. And there's one that I own and in my portfolio, and it's breaking out to all-time highs, and that's Arizona Sonoran, because they have copper cathode. They don't have to take that copper and have it smelted outside the country. So and plus their project is also not on federal land. And, they've got strong backers, they've got access to capital. So this stock is really doing well. And there's several others that I've got on my watch list that are doing rather well also. So I would like to get a little more copper exposure, but I wouldn't want to be chasing anything here.
That's funny you bring up Arizona Sonoran. That was brought up on the weekend show by Joe Mazumdar because of that copper cathode that they can produce. So they don't need to smelt it out of country. And that stock, boy, oh boy, has done very well. So, Dave, overall, look, I know that you're sitting tight in the positions that you have built, but you have also outlined a scenario here where you think best case for precious metals, especially, is to move sideways, consolidate these gains. The chart is sure showing us that this just could keep on going. But let's face it, if a top is hit, if there is a quick pullback, that could last some time because of how long this is run. Do you think you'll start hitting the sell button on some of your winners to build up more cash?
Well, I'm really looking at that 43 level in the GDX. We had a weekly breakout above that level, which is a level that hasn't been seen in 13 years. So I'm looking at that level closing on a quarterly monthly basis next Monday. And it looks to me like it's a very real possibility because weakness continues to be bought in these miners. And also, I'm looking, I think I talked about this last week. I'm looking at Newmont's chart. They've got that 2.5 year monthly inverse head and shoulders bottom. And I'm looking at the neckline at $55 is the share price where the neckline is. If you get a move above 55 with good, strong volume, that will be basically an indication that the general investors are coming into this sector in size. Same with the GDX. If you see the GDX continue to move higher above that 42, 43 level on a quarterly basis, you get that quarterly close. Fund managers are going to take a look at this. Smart money is going to take a look at this and say, look, we got to get into the gold space here. Like I said earlier, these miners, they're making gobs of money. The margins are rising and inflation has basically gone sideways, and the gold price keeps going higher. So their margins are very strong. Their balance sheets are strong. So, the bottom line is this sector is finally starting to get some generalist attention. So I'm still in be right, sit tight mode. And like I said last week, I got a couple of positions that are about to reach my average cost, that the share structures have been blown out now. When I first got into the stocks, the share structures were tighter, but both these companies were forced to raise money at lower prices. They had to add warrants, so their upside is now minimal compared to other companies that I got on my watch list that I want to get into that are still flying under the radar. So there's still a lot of companies that are flying under the radar, but you don't want to take you don't want to basically make your decision on FOMO. You want to make your decision basically on each company. Take each company for why you got into it. Has that narrative changed? And if so, you have a watch list ready to shift that capital into something else. Do your due diligence, call up the company, get on a Zoom call, make sure you're getting in the right stock because you want to hold once you get into these things now for the next year, for the next 2 or 3 years.
All right. Dave, great chatting with you. Thanks for your insights here. And look, this is a great environment for precious metals. One thing that I think we've reiterated here, stocks are doing well too. So I'm sure everybody is sitting on some very nice winners in their portfolio. Just watch this price closely and understand that a lot of what's driving this too is the shift away from the US and this constant geopolitical aspect that is honestly the perfect storm for precious metals. We'll see if copper stocks start to play some catch up as well. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Dave, nice chatting with you today.
Thanks, Corey. Always a pleasure.